Hello, this is Manesh Patel. Today is July 25th, 2010. This is the weekly Ichimoku analysis for the currency market. Again, we'll go for a normal disclaimer over here. This is for presentation is for learning purposes. For educational use, all the charts are either in Thinkorswim or TradeStation. Here are my contact details. You can contact us at eiicapital.com to find out more information about Ichimoku or anything else. Okay. So let's go look at the dashboard first, as we normally do. Remember, we're looking for ratings for above 5 for all the time frames for the currencies for bullish scenario and -5 for bearish scenarios. You could see here that the daily is basically bullish. However, the 120 and 240s are basically showing signs of weaknesses. So either the lower time frame is about to influence the higher, or higher is about to influence the lower. We're not sure yet. You got to look at the charts and determine that. But you're kind of looking for to see what happens with these threes right here. If you start seeing them move into fours, then you probably have a lower the higher is influencing the lower time frames to start changing and to start moving bullish. Let's go look and see if we can find some trends in here. You could see in here these are weak. US CAD may be a scenario where the lower is now influencing the higher. We got to definitely look there because look, that's -7. These are weak. So we're going to look at the US CAD later. Australian USD is definitely trending on all time frames, so we'll definitely look at that one. And then we look at the others. You really don't see anything else. It's what kind of pops out. Australia, British pound, Australian, a little weird there because you got conflicts among all the different time frames. Basically, right there, you probably have a gap scenario. So we're definitely going to look at the Australian USD and the US CAD, but let's go take a look at the Euro. So that's typically where we start off with. Okay, so let's go look at the Euro USD. If I can type. Let's go look at the weekly time frame as we normally do on this video. And you could basically see last week we said that we were going to the Cajun Sin. Cajun Sin moved down a little. Pretty much we're right at the Cajun Sin value right here. So it's kind of key to see exactly what's going to happen here. Sorry about that. Had a little glitch on my charts here, so I just had to adjust that. But my charts were shifted by 1 bar. Anyways, here if you look, we're basically came right to the Cajun Sin. We kind of bounced off that. A lot of people think of this as a doji day, so a lot of people are looking at this as possibly being the turn here to go lower. However, that's not necessarily true at all. You're between the Cajun Sin and the Tinkin Sin, so right now you got the 1.2448 value and you got the 3035 value. So you kind of don't know what's going to happen here. We are in a pullback. It's going to keep on pulling back until we start going down to these levels right here. So that's a key level right there, and this is a key level right there. So we're basically ranging in close to about 560 pip range. What happens at this level here is kind of key. If we close below the Tinkinson, then we have a possibility of going down to retesting the low and continuing forward, going down to the trend. However, right now we don't know what's happening at all. This is what the weekly time frame is telling us. Let's go down to the daily time frame. Let's see what the daily is telling us. Let's zoom in. We still have our key levels there, and you can kind of see that we got to that key level here. If you look at this, we are basically showing signs of bullish scenario in here because we are above the cloud. However, the Cajun Sin is in the cloud. So unless this price starts moving up drastically and possibly gets up to about here, breaks this level of 30.42, this Cajun Sin is going to be there. If it breaks the 30.42, then we have a possibility of getting up to this level here and this level here. So those are the next levels that we kind of see what could happen, but that kind of sees what happens there. Really don't know right now. I'd be very cautious playing your USD bullish or bearish. Reason why there's nothing really there, a complete clear sign that there's a trend. If you're a day trader, based on the daily time frame right now, you could sit there and play this bullish, but remember, you got to be very, very careful. Keep your risk very low. Okay, let's go look at the US Australian USD. That one's definitely trending, and on all time frames, so 122.40 and daily. You could see that it is. We are at a major level here, resistance level there, and there's one here, and one here. Okay, so those are levels and this thing moving up. If you're not in this, I'll be very careful. Definitely sit there with, probably wait for a pullback, and then possibly can go on a short-term day trading type of scenario. Let's go look at the weekly time frame before we say anything there. And if you look at the weekly time frame, we basically have closed above the cloud. That's good. However, the Chicago is bearish, future cloud is bearish, and so we're really, and the Tinkinson Cajunston is bearish. So this may be the first sign of a turnaround for the Australian USD, but the chances are very, very rare. We got to wait for more of a price action to happen on a weekly time frame before we could really sit there and go long term on this instrument. But short term, this did make a movement up, exceeded this pivot here. A lot of people thought this was a pullback, pivot, exceed the pivot, and go. So this possibly can sit there and trend on a short term basis, but long term, it's definitely not there yet. Okay, let's go look at the other currency, US CAD. And in there, basically, if you remember the US CAD, let's go back here. Basically, the daily was -3. Lower time frames are sitting there now starting to get very strong. So lower time frames may start influencing this guy to sit there and start going bearish. And it does look like that. However, this Chicago has to sit there and break this. So until this guy really sits there and breaks this level down here at the 275 level, you really sit there and really can't sit there and do anything right now. Let's go ahead and put that in here. Let's put this price level in here. And let's go look at the 240 time frame. You could see the 240 time frame is setting up. Now bearish. And the 240, if you break this guy right here, you could sit there and possibly play it for about, what, 70 pips or so forth between there and there. Not sure if that's worth it. For the day traders, the scalpers, that could be. But for us, it's not, because we're looking for long-term trends. Okay. Again, if you have any questions, please post them on eiicapital.com. Have a good luck trading this week.